Hi, folks. Joshua Cohn, the student loan lawyer. I'm here to talk about what's going on in the world with student loans and the COVID-19 stimulus package that was signed this past weekend and how that affects folks. There's a lot of things moving here, a lot of moving parts, a lot of questions about if your student loans apply, if it's a federal loan, if it's a private loan, what protections you have, what protections you don't have. So I'm going to try and recap it, and then if you do have questions, please put them in the comments, and I will do my best to address them. Obviously, I'll address them live if possible. If it's a deeper question, I'll reach out to you afterwards. So, so far, hi Zach, how you doing? So far, there is absolutely no protections for those of you that have private loans. And that's a big problem unto itself. We don't really know what private lenders are going to do. We are seeing mortgage companies stepping up, auto finance lenders stepping up, credit card companies are stepping up. So we can only assume that private lenders will also step up. I don't think they want to be the industry that is leaving everyone out in the cold. So we will see how that works. Really, the issue is federal loans and the protections or lack of protections that they are affording right now. So with the stimulus package, it makes plain that federal student loans are protected. Unfortunately, you got to read between the lines. It says loans that are held by the Department of Education. Well, what does that mean? Now, I did a blog on this last Friday where first, I show you the studentaid.gov website where you can learn about your federal student loans. That's always a good place to start. And from there, you find out, do you have direct loans? Do you have FFEL? Are they Perkins loans? Are they a combination thereof? You want to look at that. When it says loans held by the Department of Education, all direct loans are held by the Department of Education, so those are all protected. The real issue comes down to some defaulted loans. If you have an FFEL loan that's in default, there is a chance that it has been assigned to the Department of Education. If that's so, you're also covered by the stimulus package. Normally, FFEL loans are not held by the Department of Education. That's actually the definition of an FFEL. It means it was originated by a company other than the Department of Education. It could be Sallie Mae, Navient, Great Lakes, VSAC, Wells Fargo, Chase. Name a bank. That's an FFEL. So if you have an FFEL loan that's in good standing, you're not getting any of the protections. So what protections are we talking about here? It's quite a few. If you're in good standing, then payments are suspended until October. Interest is dropped to 0. If you're pursuing public service loan forgiveness, you get 6 months of credits even when you're not making those payments for the next 6 months. So that means don't make the payments, and your public service loan forgiveness, you're still accumulating 6 payments for that. If you're doing just regular IDR forgiveness, whether you're on REPAY or IBR or any of those income-driven repayment plans, as you know, after 20 to 25 years, you achieve forgiveness. Those 6 months of non-payments until October, that still counts. So don't feel like, oh my goodness, I have to make payments or I'm going to lose out. You're not. A lot of other people are concerned, well, is this considered a forbearance? Does it count against me? The answer is no. So all loans have up to 3 years of forbearance and some other deferment time. This is special. It does not count towards that 3 years. For those of you that have been around long enough, you also know after deferments and forbearances, interest will capitalize. The interest converts into principal. That's not happening here. And it's not happening here for 2 reasons. One, because they said it's special and they're not going to capitalize. And 2, the loan interest has been set to 0%. That means there is no interest accumulating to be capitalized. That's really important for those of you that are on the income-driven repayments because you probably have a payment that is less than interest, so every month you have interest accruing. So you do have accrued interest before all of this happened. It's not going to capitalize with this 6-month stay. So that's important. Truthfully, if you're on IDR, you really shouldn't be worried about your interest anyway. You're not going to pay off the loan. You're not going to pay the interest. You're going to get forgiveness. So please don't focus on the interest. I know that's hard to swallow, especially if you're financial savvy. You're not going to pay the interest. Don't worry about it. So those are the protections if you're in good standing. No payments, 0% interest. If you're in default on a loan held by the Department of Education, again, with a direct loan or an FFEL loan, what that means is all collection activity is going to stop. So if you have a wage garnishment, stops. Social Security offset, stops. If your tax refund was scheduled to be intercepted, file taxes now. Because one, it sounds like you need it for the stimulus, and two, you're going to get your refund right now. If you've already filed your taxes, if it was in process to be intercepted as of March 13th, they won't. If it was intercepted before March 13th, you may not get that back. It's just bad timing. So, and I see some questions coming up, so I'm going to get back to those. So if you have a direct loan that's in default, or you have an FFEL loan in default that's been assigned to the Department of Education, no more collections. Something interesting that they're doing, however, which I find fascinating, if you're rehabilitating your loan to get it out of default, the next 6 months when no rehabilitation payments are due, you're still going to get credit for that. If you're not in a rehabilitation plan, now's the time to do it. That might be a little hairy because most debt collectors are on a skeleton crew like everyone else. But if you can get through, check their websites, maybe you can fax them and get enrolled that way. The next 6 months you have no payment to make, but you still get credit. Rehabilitation requires 9 payments in 10 months. You can't fast forward it. It's got to be 9 individual monthly payments. You're going to get credit for 6 right now. That means when you come out in October, you're only going to have 3 more payments to do. Now, what's even more interesting is many people have to do rehabilitation because there was a garnishment. Well, the garnishment's going to stop. With rehabilitation, once you make your 5th payment, garnishment stops anyway. So let's put all this math together. Let's say you had a garnishment going and you thought you couldn't afford rehabilitation. Now they're going to stop the garnishment. They're not going to require rehabilitation payments, so you can enroll right now. When you come out in October, you'll have credit for 6 payments. It means the garnishment won't start again. Starting in October, make your 7th rehabilitation payment. November is your 8th. December is your 9th. You're going to start January, not in default, back in good standing. That's when you apply for income-driven repayment. I know there's a lot of stuff here, so watch this as many times as you need to. My point here is this is a golden opportunity to get your loan out of default. 6 of those rehab payments you don't even have to make. And when the rehab payments come due in October and November and December, they should be affordable because there's no more wage garnishment. You've made 6 payments. This is so exciting. All right. Again, that's only if you have direct loans or if it is a defaulted FFEL that has been assigned to the Department of Education. How can you verify? Either the debt collector can verify that for you. Who is the debt collector working for? Are they working for the Department of Ed? Or are they working for someone else like ECMC or Texas Guarantee, which is now Trellis, or Great Lakes, which is now Ascendium, or United Student Aid Funds, which is also now Ascendium? Ask the debt collector. They're not going to lie to you. They're not allowed to. Federal law doesn't let them lie to you. If they do, please call me. Can we use the stimulus checks to catch up? You could, but I'm not sure that you necessarily want to do that. So one of the questions that people like to ask is, I have a 0% interest loan for the next 6 months. I should pay as much as I can so that I can get ahead. Careful there. Okay? There are two paths here. If you're on assuming that your loan is in good standing, if you're on an income-driven repayment, there's almost no reason to make advance payments now because you have lots of past due interest because IDR is usually less than interest only. So making extra payments is just going towards the interest, not the principal. You don't have any interest accumulating now, but you have past due interest. So I think use your stimulus check for what you need it for, like eating or rent or things that are necessary. Actually, I'm really going to go with food and medical expenses. If, however, you're on a regular amortized payment, 10 or the 25 year, and your goal is to pay off the loan, well then yeah, make your regular payment if you can afford it because there's no interest on it and you're going to end up paying a little bit extra principal. Again, you've got to do what your finances let you do. If you're worried about your rent and things like that, please don't worry about paying extra on your loan. So I was waiting for that question. Thank you, Olga. The Fed Loan website, specifically Fed Loan, but many other servicers have not yet updated their websites because the directive has not yet come down. The stimulus package was just signed on Friday. Nobody works on weekends in the government. Sorry, that's a generalization. The directive has not come down from the Department of Education to back down to the rest of the servicers as to specifically how they're supposed to enact everything. So FedLoan and some other websites are talking about the executive action that came out earlier last week before the stimulus package was signed. The executive action said you could apply for a special 60-month forbearance, but that would be a regular forbearance, not counting towards PSLF or other things. This is different. The stimulus package is law and it overrides the executive action. So as of now, everything is supposed to freeze. Now, as I understand it, the directives need to be given to the servicers by April 11th. And once that happens, all payments for direct loans will cease, but you will still receive credit for public service loan forgiveness and for IDR forgiveness. People are also asking, what about auto debits? Do you need to stop those? Again, all of that should stop by April 11th. If you have an auto debit payment that's going to come out between now and the 11th, call the servicer and have them stop it. Some servicers, through their website, you can stop it, and that's what I would do. But this is all covered, and the cease payment's actually supposed to backdate a little bit. So, again, don't expect to see changes on websites until at least April 11th when those directives come down. Interesting comment here. I just want to reread it. Okay. Okay. Are we going to have to make up the difference because of the 0% interest? No, we're not. So the question again is, if I'm making payments right now with the 0% interest, how is that being applied? It's being applied in this way. Number one, if you have back interest because you've been on an income-driven repayment, you have interest that you weren't paying. If you make a payment now, that payment's going to go towards the back interest first. None of your payments hit none of your payments hit principal until all of your interest is paid off. So again, if you're in an IDR and you had accumulating interest, there's no reason to make payments right now. Keep that money for other things, food, medical, so on and so forth. If you're in a payment plan where you're paying interest anyway because you're paying the 10-year or the 25-year amortization, then yeah, making payments is going to go straight towards principal. There's no interest paid. All right. Yeah, that's a good question, Zach. Recertifications. I haven't seen anything on whether recertifications are all going to be pushed until October or if the recertification dates are still valid. So really to expand that question, if your recertification, you're on income-driven repayment, and as you know, every 12 months you have to re-verify your income through recertification. If your recertification is due, say, May, June, July, August, is it still due, or are they going to push it all to October? The way I'm looking at this is you want to recertify by the date that you normally recertify. And there's two reasons. Number one, your income, there's a good chance, is lower now than it normally is. Apply with the lower income, and you'll have a lower payment when you start paying in October. The second reason is, until I see anything else that says they're moving it, I think you want to stick with the norms. I did not see anything that says they're pushing recertification dates. So I would continue to recertify. And look, if you're furloughed, if you're unemployed, then you're going to recertify at a $0 payment. Okay. Is there any obligation to update the Department of Education or your servicers once you start making more money, or if you get rehired, or if you get a new job? Actually, no. There's no obligation so far, and there's nothing in the stimulus package that says, come October, you must update us. Now, what is interesting with the stimulus is letters are supposed to go out starting April 11th, also letting you know that your loans are suspended. Starting in August, the Department of Ed and the servicers are required to send six letters to everyone letting them know payments will be restarting in October and what to expect and yada, yada, yada. So that might be a time when they talk about the recertification, but until then, we don't really know. Yes, now would be an excellent time to sign up for an income-driven repayment plan, especially if you've been affected financially. Again, if you're unemployed, if you're working less hours and making less money, if your salary's been cut, whatever it is. Now's a great time to apply. Again, you still don't have to pay for the next 6 months, but starting in October, you're going to be on track with whatever you set up for the income-driven repayment plan right now. There's nothing wrong with that. Remember, income-driven repayment is a safety net. It's not a solution. It's a great tool, not a solution. You know, a lot of people ask, well, I'll never pay this off. That's what income-driven repayment is for. You may never pay off your loan, but you'll pay it according to the rule book. You'll pay what's affordable. Your loans will stay in good history. Your credit will be good. Life carries on. I'm not here to preach about your moral obligation to pay the debt. I'm talking about your legal obligation. You meet that under your income-driven repayment plan. There's no reason. And look, let's say you're making lots of money and things aren't going well. Sign up for IDR now. And in October, you can reevaluate. Maybe you start making money again and you want to pay more. You're always welcome to pay more than the income-driven repayment plan. But you can reevaluate your situation. And if you start doing really well and you want to pay more or you want to get off of IDR onto a regular payment plan, you can do that. But there's no reason not to take advantage of what's going on and set up a safety net. That's a great plan. I would tell anybody that if they come to me. Now, some people say, oh, but I'm going to pay more interest because on IDR you don't even cover interest and yada, yada, yada. Look, this is survival. IDR is about survival. If things start going well for you and you start making lots of money and you can pay off your loan, great. The period that you were on IDR is what I call survival. You didn't know that you were definitely going to make that money. It's like the lottery. You don't know that you're going to win it. If you did, the FBI would like to talk to you. The point is, you don't know what life has in store for you, and IDR is a great way to handle things. Okay? Yeah, you pay more interest in the long run, but this is about survival. And you survived. Nobody complains about the condition of their life raft when the boat sinks. As long as they have a life raft and they can survive and they can make it to land. They're not concerned that I want a pretty pink one. They want to survive. That's what IDR is. It's survival. Okay, what else? For those of you that have FFEL loans that want to take advantage of the stimulus package, maybe you're in good standing. You say, well, why is it's unfair that mine are FFEL and I have to keep making payments. I don't know that the FFEL lenders and servicers will offer you the same deal that the stimulus package does. They don't have to. The government could have made them. Hell, Secretary DeVos could still do that, but enough said. So if you have an FFEL in good standing and you want to take advantage of the stimulus package, you could consolidate your loans. Just means refinancing them over to the Department of Ed. Any consolidation now will automatically become a direct loan. Okay, so once you do that, then you get the stimulus package advantages. A consolidation can take 30 to 90 days. I have no idea what the processing time is now with Skeleton Crew. They were averaging 60. So if you did it today, hopefully it'll be done by June 1st. That means no payments in June, July, August, September. It's 4 months. And again, now is also a good time to sign up for income-driven repayment. One advantage of a direct loan over an FFEL when it comes to IDRs, the only IDR you can have with an FFEL is IBR. Direct loans can have repay, which is a better formula. IBR is 15%, repay is at 10%. So not only will you save some money in the long run, but again, you'll also get the benefit of the stimulus package defense. Now, there is one thing you have to be careful of. If you have an FFEL and you're on IBR, you've been racking up time towards forgiveness. If you consolidate, you lose all the time you racked up. Now, if you're only going to lose 2 years, it might be worth it. If you've been on IBR since it came out in 2009, if you consolidate now, you're going to lose 10 or 11 years. And you're starting from scratch. I don't know that it's really worth doing this. So think carefully. Okay. Kevin, about the $10,000 or $30,000 student loan forgiveness that was debated, that is not part of the stimulus. There is no immediate lump sum forgiveness on any of the student loans. That hasn't passed. Someone asked Danielle about what about private loans under your bank? Okay, a private student loan, again, an FFEL could be with your loan with your bank too, but again, that's a federal loan. And the first place to check is studentaid.gov. If your loan's not there, 99% chance it's a private loan. So if we assume that we have a private student loan with the bank, call the bank. Ask them what they're doing for you. Because again, these are the same banks that also do mortgages. They're offering mortgage relief. They offer car financing. They're offering relief on that too. And credit card companies are offering relief. So contact your private lender and ask them, are they offering any kind of relief? Are they allowing you to at least skip 2 months of payments and build it into the back of the loan? Are they willing to lower interest rates? Are they offering lower payment plans? There's nothing in the law that requires them to offer you anything. I really think public relations is going to push this. I will tell you, if you contact your bank and they say, sorry, we're not doing anything, call the local paper, call the reporter, call the Times or the Post or anything. They'll want this story. And as soon as there's a press release or a news media story, hell, as soon as the media contacts the bank and says, hey, we're doing a story on private loan resources and help, and we understand you're not doing anything, they may change their tune real quickly. Surprisingly, a lot of the mortgage companies have learned from the 2008 crisis, and that's why they're stepping forward. Also, a lot of the stimulus package is to help those lenders, so they're getting help. So contact your private bank, private servicer, private loan servicer, and ask them point blank, what can you do for me? Now, private loans in general will offer 2 to 3 years of forbearance. If you haven't touched that, then now's a good time to touch it. But I would still ask them anyway, do you have special relief? That doesn't count towards my forbearance. And what if you've already done it? What if you already used that forbearance? Ask them. If you're still having issues and there's nothing they're going to do for you, well, I don't really have any ideas. I mean, there's some bankruptcy ideas, but I don't think bankruptcy right now is the best idea, unless there are other things going on that you need bankruptcy relief. I'm not a bankruptcy attorney, so I'm not even going to talk about that. If you are debating bankruptcy for any reason and you need a bankruptcy attorney, I'm going to send you to NACBA.org. That's NACBA.org, which is the National Association of Consumer Bankruptcy Attorneys. And you can find someone close to you and reach out to them. I can tell you most bankruptcy attorneys are still working. They're taking calls. So feel free to do that. All right, we got another good question here. Okay, so the 6-month suspension, I want to call it a suspension. I don't want to call it a forbearance, but the 6-month suspension is supposed to happen automatically starting, if not now, sometime by April 11th when the directives come down. And again, there are some websites out there, FedLoan and some other servicers, that don't have information about the stimulus package. It's about the executive action that happened prior. So they're saying you have to call, it's a forbearance, it'll capitalize, yada, yada, yada. That's all gone now. The law is the law. And by April 11th, those directives will come down and all loans should be suspended. And what I would say is feel free to bug your servicer. Not every day because they're also short-staffed now, but for those of you that have services with websites, you should have an online account with them, and that's where you can also check. And you might notice that all of a sudden your due date or your payment that's due is zeroed out. Once you see that, you know you're good. Again, also on that line, if you have an auto debit payment, that should suspend automatically. Let me take a minute and talk about auto debit payments. Personally, I think that's a really bad idea if you're allowing your servicer to auto draft from your account. Why? If you're on an income-driven repayment plan and you forget to recertify on time, well, when you forget to recertify, they automatically kick you into the 10-year standard plan, and you may find your IDR payment of $100 a month. That 13th month when you forgot to recertify, they don't take out $100, they take out $1,000 because maybe that's what your 10-year payment plan. I know about this, I've seen it. That's why I don't like auto drafts through the servicer. They have control. And there's nothing in there that says, oh, if you forget to recertify, they won't take your money. They will. You authorized it. If you want to do auto payments, set it up through your bank on your side. Every bank offers online banking. You can go in and set for an auto debit or an auto payment. Send it to your servicer. You control it on your side. It means if you forget to recertify, you're still only going to send them your IDR payment. It won't count because it's not what the payment should be. But the point is, you're never going to have a large draft that you're not expecting. You're in control. So that's my quick piece on auto debit. If you do already control auto debit on your side, then yes, you have to go into your bank and stop it. If the servicer controls it, call them. You can cancel. If your payment is due after April 11th, the auto suspend should kick in automatically. Now, if they take the auto debit anyway, they should be refunding it. And my guess is if you make a stink to the servicer, they will refund it, because if they don't, your congressperson can probably help you get it back. That might take a little bit of time. I'd be happy to help you get it back. In any case, I think your due diligence is, again, if your payment is before April 11th, sign into your servicer and stop the auto debit. After April 11th, it should be auto pay. But auto payments through your bank won't count for the 0.25% reduction in interest, correct? That is correct. And Tony, that's only useful if you are on a plan to pay off your loan. So if you're on the 10-year or the 25-year standard payment plans or the graduated payment plans that will pay off your loan, all right, so you're going to save 0.25%. To me, the convenience of knowing they can't screw up is worth it. But you're right. If you want the 0.25%, you have to do it through the lender. If you're on an IDR plan, I don't care about the 0.25% because you're going to get your loan forgiven anyway. So who cares about 0.25%? Again, my opinions, I've been doing this since 2008. Interest is not the worry if you can't afford your regular payment. But yes, Tony, you are correct. That is a good point. What else do we have? Do we have more questions out there? Again, that's the stimulus package. Only affects direct loans or FFEL loans that are in default, that have been assigned. I haven't spoken about Perkins loans. Perkins loans aren't really affected by the stimulus package either, because most Perkins loans are held by your university. So I went to Quinnipiac University for law. I didn't get a Perkins loan in law school, but I did at my undergraduate at Brandeis. Brandeis held my Perkins loan. I paid Brandeis directly. So if I still had a Perkins with Brandeis, it would not be covered by the stimulus. There are a few Perkins loans that have been turned over to the Department of Education. That means the school has lost their Perkins program. They don't have it anymore. If your loan has been turned over to the Department of Education, then yes, that Perkins gets the benefit, no payments due, no interest, yada, yada, yada. Now's also a great time to think about consolidating and pulling your Perkins from your school and wrapping it into your Staffords and graduates and pluses and everything else. If you do that, you increase your debt load on the federal side, but now that it's a direct loan, no payments are due, and now your Perkins loans qualifies for income-driven repayment plans. Now, I want you to think about some math here. Let's say you have a $5,000 Perkins loan over here and $100,000 of Staffords and everything else over here. If you're on an IDR at $200 a month and you put the $5,000 into the rest of your Staffords through consolidation, your IDR is still only $100 a month. You got rid of a bill. You've helped your cash flow. Now is an excellent time to think about that. But again, if you've already consolidated your loans and you're adding the Perkins, when you do that, it's a new consolidation loan, and any time you racked up for IDR forgiveness, you're going to start over again. So be careful about if you should or shouldn't. I'm happy to answer questions about that specifically, offline because I don't want to talk specifics here. So what's the newest info on rehab? Okay. Yes, the answer is if you're doing a direct loan rehab or an FFEL rehab that is owned by the Department of Education, then yes, your rehab payments automatically count even though you're not paying it. Okay? So, if you're doing a direct loan or an FFEL rehab with the Department of Education, you don't have to make any rehab payments and you still get credit for 6. But again, you have to be signed up for rehabilitation. So if you've been delaying and not doing it, contact the debt collector, get on a rehabilitation plan. Now's the time to do it. Resets the clock on consolidation. Tony's had a question or just an extra statement. Again, when you consolidate, you're starting over from day 0 on your IDR forgiveness clock. That's why you want to be careful if you're doing a new consolidation. You're resetting any time that you have. Again, if you've only had 2 months or 2 years of IDR forgiveness, I don't think that's worth the big deal. If you want the consolidation for the other benefits, then do it. If you're going to lose 5 or 10 years, that may not be worth it. So, again, you have to look at your individual situation. So, all right, we've been running for about 30 minutes. Do we have any other questions or concerns or topics that you want to see me address? If not, I'm going to wrap it up. I am going to continue doing these Facebook Live sessions every Wednesday at 1 because I think they're good. Is there any way to get out of default without rehab if the loans are already consolidated direct loans? And the answer is no. If you have a direct consolidated loan, that's your only loan, and it's in default, the only way is to do a rehabilitation, which again, now is the best time to do it because your first 6 payments you don't have to make. So, sorry, Tony, that's the only way. If someone's in default on multiple direct loans and they have a garnishment order, yes, the stimulus does stop the garnishment. It doesn't put it into forbearance because you're in default. It just means there's no collections. So the question is, let me get into the basics here. Normally, if you have a garnishment, you're not allowed to consolidate. So the question is, since the stimulus will stop a garnishment on a direct loan, can you consolidate? And the answer is, we don't know. I think now's a great time to try. And I would do 2 prongs. Zach, this is a great question. 2 prongs. I would attempt the consolidation and sign up for rehabilitation anyway. If the consolidation fails, you won't know for 2 or 3 months, but you'll have 2 or 3 months of your rehab already paid under the non-required payments. You see what I'm doing there? If the consolidation funds, the rehab is immaterial, you're out of default, the garnishment's gone. So yeah, Zach, that's a great idea. If you can do a consolidation, but you weren't sure because of garnishment, I would try it anyway. And I, myself, am trying it with a few of my clients right now. There's no reason not to try. So, any other questions? Questions about prior outstanding interest for people on IDR. Is there a risk of it capitalizing if people take the 6-month suspension? Well, so number one, you can't not take the suspension. It's automatic. However, they've already said your interest will not capitalize at the end of the 6 months because they're not counting this as a regular forbearance. So again, those of you on IDR that have past due interest from other payments, just because the way it works, that interest will not capitalize in October when we're done with all of this. No, I don't think there's a way to opt out of the 6-month suspension. And honestly, there's no reason to, because again, you get 0% interest. You don't have to make the payments and the interest won't capitalize. If you want to make payments, only make them if you're on a regular payment plan. If you're on an IDR and you have accumulated interest, there is no reason to make payments because all you're doing is paying your past due interest. I'll qualify that. If you only have $1,000 of interest due, let's say your IDR payment isn't covering interest, but there's only a smidgen of interest not being covered. Let's say there's only $50 of interest that you're not covering. Maybe you only have $600 in past due interest. Maybe you do want to pay it because you're on track that you'll start paying down the loan starting in October. I don't know though, because right now these are very difficult financial times for many people. And I'm of the school, I'd rather you keep the money in your pocket for food, for medicine, maybe for rent, because the rent moratorium is only for a little while, and you are going to have to pay it eventually, I assume. I don't, to me, student loans are not your priority. Your housing, your food, your health, those are your priorities. Keeping your car, keeping your insurance. Those are your priorities. So right now, I don't think it's worth making payments that are only going towards interest. If you're on a regular payment plan and you're going to pay the loan and you can afford to take advantage of the 0% interest, yes, now's the time to do it. It's a great question, Michael. But I honestly, I don't think. And by the way, if you're not sure how much interest you have unpaid, log in to studentaid.gov. It'll tell you your principal versus your interest. If you've got $10,000 in interest hanging out there, I just don't think it's worth making that payment. Again, especially if you're furloughed, if you're unemployed, or if you're underemployed, that stimulus payment that you're getting, that's your money anyway. I hope you folks know that. The stimulus money that you're getting is really kind of your money. If you normally get a tax refund, this is just a cash advance of that tax refund. I'm not a tax attorney. I'm not going to go into the details, but pay attention to that and spend it wisely. Again, food, housing, medical. I don't think anyone should be using their stimulus check on their student loans. I just don't think that makes sense. If you're in a plan to pay it off, okay, maybe. If you're an IDR, don't. If it did capitalize, would there be a class action suit? The answer is no, because if it does capitalize because the law says it does, then who are you going to sue? As I understand it, it doesn't capitalize. So the only people that would capitalize it would be the Department of Ed, in which case they're going to undo it through congressional action because Congress will push on them. If a servicer did this, it's going to be done through Congress. I don't know. You know what? Ask me in October if we have some folks where it happens. Believe me, people will jump on that very quick. There are quite a few firms in D.C. that do class action work on education things. They're made up of former Department of Ed attorneys and former CFPB attorneys. So, Tony, keep in touch with me. If you see that, yeah, we'll look into that. I really don't expect it to happen. Believe it or not, there are quite a few things in the Department of Ed that work the way they're supposed to. We don't hear those stories much, but it does happen. Yeah, these are all good questions. Do we have any others before that? Otherwise, I'm going to wrap up. Again, the stimulus works for direct loans, not so well for FFELs or Perkins, not at all for private loans. I will also invite you, if you guys have other questions that you think of, maybe you don't want to share it, you're welcome to do a private message to me. You're welcome to email me directly at jcohen, Cohen, at thestudentloanlawyer.com. I'm happy to talk to you folks. If you have a bigger issue, yes, I am still doing appointments. You can see that on my website at www.thestudentloanlawyer.com. If you have an issue with your private loan lender and you just want to let me know, if you want a connection with the media person, happy to do that. I also encourage you to reach out to your congressional folks. They are a little tied up right now, but those complaints are still logged and they are going to get through and follow them up. And believe me, the last thing a private lender wants is the media calling or even a congressional representative calling. It doesn't matter if they're Republican or Democrat. They just don't want that because this stuff is public knowledge. It's a public record. People can look at it. I also encourage you, if you want to log a complaint with the CFPB, do it. I'm happy to help you out as best I can. Again, feel free to reach out to me. Folks, thank you very much for staying here. Thanks for those questions. It's been interesting, and I will be back here next Wednesday at 1 p.m. Thanks very much. Bye now.